Hello, it's Patrick Reed from the Adamus Principle. We had a huge build-up for US CPI and it arrived. But what happened to the dollar? It struggled, didn't it? It was a big fanfare. Everyone was thinking, is this going to be a 4.7, which was the expectation on the headline? It came in at 5%, absolute, hit it right out of the park. And the core from 3.5 expectation to 3.8, a real inflation number that raised lots of eyebrows. But what happened? Nobody sent the memo to King Dollar because actually in a lot of pairs, it went lower. Okay, the markets looked right through this. So what does that mean? It means the markets believe the Fed. Now the rates market doesn't, but certainly the dollar at the moment believes the Fed. So let's look. We had, apart from that, we had a pretty slightly upbeat ECB, nothing really to note, upward lift on the projections, but a steady hand will remain with us, apparently from Christine Lagarde. Let's look at the first chart, Eurodollar. Options in play around 122, the figure all the way down to 121. You know the range, it's the Fibonacci corridor, some 61.8 versus the 76.4%. Really, at the moment, you're probably going to see this range bound, especially with these big, chunky options either side. So I don't see this breaking out. It is Friday. It is, we're just going to consolidate. That's my view. Next chart. Okay, so we've got Aussie dollar again, even tighter range. This 77.70 proving a little bit too much for any of those bulls. I mean, you have to say this CPI did nothing for dollar. It was certainly, and in many cases, dollar went softer. So I really do see 77.16, very tight ranges, all the way up to 77.71, just 60 pips, absolutely nothing in it. We're waiting for direction. The Bollinger Bands are squeezing. That means one thing, a breakout. Maybe next week, who knows? Next chart. Dollar yen, really the victim of 10-year at 1.43 last time I looked. So, you know, it was looking pretty perky in the last few days, being quite resilient. But now I do see this 109.20 breaking. If it does, this could get real ugly and real fast all the way down to 108.80, then 108.30. That's your dollar yen. Next chart, please. Dollar CAD. Really, you'd have to really want this to be lower because of the rise of oil, taking out that $70 a barrel. I would just say still the vehicle and passenger of the crosses, but 120, the figure, probably some options down there, and then 121.44. Again, very rangy, very dull, very muted. And finally, our old friend cable, really 140.79. That was a key pivot. Above that, 141.10. Now, cable has really got some Northern Ireland issues there, but they seem to be ironed out. There's some trade chatter with Europe, seems to be not really affecting cable. And you know what? It's just a weaker dollar that's really one of the gifts that keeps on giving to cable. And at the moment, it's yours really to buy only if we stay above 140.80. That's your key level on the final chart from me, Patrick Reed, and the Adamus Principle. Have a wonderful weekend. Thank you.